guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Guys, this Thursday, they are announcing the CPI report, which is an inflation indicator that a lot of people use to get a gauge of where inflation is at. And in today's video, we are going to be looking at what's expected. What should you do? Should you buy beforehand? Should you sell beforehand? So I hope you guys all enjoy this. If you guys do, hit that like button, subscribe, and guys, let's dive into this here. So we are going to be talking about the CPI report that's getting announced this Thursday, 10/10/24. And if you guys want to learn more about investing, trading in the market, check out our school. You guys can use code LEARN, 50% off. A group chat, private live streams, quizzes, lectures. You have lifetime access to all of it. It is awesome. I highly recommend it. Check it out down below. And guys, let's jump into this. So what is the CPI report? So the CPI report is a customer price index report. It's a key economic indicator published by the U.S. Bureau of Labor of Statistics. It measures the average change over time in the prices paid by consumers or customers for a basket of goods and services, which typically includes items like food, housing, energy, transportation, and healthcare. Now, the reason why a lot of people are looking at the CPI report is because it tracks inflation. The CPI is one of the most commonly used indicators to assess inflation or deflation in the economy. When the CPI rises, this signals that the prices are increasing, causing inflation. When it falls, prices are decreasing, which means deflation. So this is why a lot of people are constantly looking at this, is because at one point the CPI report was trading at about a 8.5%, which is extremely high. So lately we've seen a good job of the Fed, holding steady on cutting interest rates and all that stuff. And what this causes is just the general, inflation to cool down, and we've also seen rising interest rates. So what to expect? So as of right now, the Cleveland Fed calls for a reassuring inflation data. They expect 0.1% monthly inflation for a headline CPI for September. Now, they also expect a 0.3% monthly core inflation. This generally is a good thing because this would mean that right now inflation is now under control. But there is some minor concerns that a lot of investors are nervous about. And this is because of unemployment. Now, I think we all know when the Fed increases rates, I'm sure you've seen rates go from like 3% to 8% at one point. Now they're hovering about 6%. But what this causes is unemployment to increase. And that's what we've seen. Since September of 2023, inflation was at about 3.8%. Now it's 4.1%. So this Thursday really isn't about the CPI report. I personally believe the CPI report will probably be decent because we've done a good job of cooling inflation off. I think the bigger report is going to be the unemployment report that's coming out later this month. So I do think, like this states, that right now people are more nervous of the unemployment rate, which could cause fears of a potential recession. But honestly, inflation should be around that 2%, which is healthy. Inflation in general is healthy for a growing economy. That's what we want, but you don't want it at 8%. That's not good. That's not good at all. So it's expected that the Fed does elect to cut some interest rates, which is good because this is going to generally help fuel the economy because people are going to be more likely to take out loans, more likely to take out mortgage payments, car payments, but more importantly, companies, right? Companies that are in debt or are taking on debt to grow their business are more likely to do that when we have some rate cuts. So there is a chance of a larger cut of 0.5%, but that's expected to kind of not happen just because there is a lot of pressure on the unemployment rate. So the general economy did add about 254,000 jobs should inflation continue to cool. So it's likely that the Fed continues to cut the rates, like I said. However, what's more important is going to be the job data. So You guys can see the chart right here. This chart is the unemployment rate since September 2022. So 2 years ago, you guys can see the slow and steady amount of unemployment rate we've seen. So to answer that question that everybody has is, should I sell beforehand? I think for most of you, it should come down to time frame. If you're investing to hold for more than a year, I want to pay attention to this, because time in the market is going to be better than trying to time the market. But if you're trying to trade during these times, this is where I just take a step back and realize, right, if we're one bad announcement from getting, a possible recession, just because there's a lot of conflict overseas. We do have, and unemployment is a little higher than we would like. So I do think the bigger issue is going to be that unemployment rate. But to answer that question of should you trade beforehand, it just means it's risky. It's a riskier time, but often higher risk does mean higher reward. So for me, during these times, I always will take my profit a little sooner. I'll cut my losses a little, sooner. And doing that just helps me, stay a little more well balanced while eliminating some risk. So guys, this is everything you guys need to know before this Thursday with the CPI report. So I hope you guys all enjoyed this. Hit that like button, subscribe, and we'll see you guys in the next one. Take care.